Good morning, traders. It's 8:01 Chicago time on Thursday, the 14th of September, the day before triple witching. Um, this is episode number 2537. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have here? This morning, several items come across. We do have a market that is gapping higher in the indices. Um, the S&P is pushing above yesterday's high, which was around 30. So we have about a 9-point gap, and we're up about 40 to 80 basis points, as you see in the U.S. markets, as well as Europe. Europe this morning, big news. The ECB rate decision came out at 4.5%, raising the interest rate, the short-term interest rate from 4.25 to 4.5. So the 25 basis points, which was well priced in to the market there. The deposit facility also went up 25 basis points. Caution though, ECB's President Lagarde is still commenting, and there's still news flow from that. It doesn't impact the U.S. Market so much, but it can be quite significant. In addition to that, about a half hour ago, we got retail sales, which came in pretty strong, 0.6% versus 0.2 expected, the prior 0.5. So it beat, but then PPI month on month came in pretty hot. That's the headline number, 0.7% versus 0.4. This is the producer price index. Not as important as the core PPI. And the core PPI, which is ex food and energy, is also really hot, which was not really expected. It came in at 0.7% versus 0.2. We did get initial claims at 220,000, better than the 225,000 expected. Year-on-year core PPI in line, year-on-year PPI is stronger. Again, the ECB press conference is in play. We do have business inventories and several other numbers. We've got some Chinese numbers coming out this evening. The market, there are several things that are at play here. Crude has pushed up and has hit the $90 mark. The overnight high is 90.06. We talked about this yesterday. You can see it in the trader bite that the expectation is a continuation to 90 for a test. The high this morning is 90.06. Crude is got some supply problems and some constraints from producers, in addition to constraints by U.S. production. And, along with iron, I don't know if you looked at iron ore prices, but they're way up as well as a commodity. The market is pricing in a China recovery. China's starting to see a few good numbers here and there and showing a bit of a recovery. You can see copper's up 58 to 60 basis points this morning, and that's what's on deck. The other pieces are the United Auto Workers strike that's looming. That could be damaging to GDP, could be damaging to the economy in the U.S. for several ways. But also we have this potential government shutdown and this attempt by the Speaker of the House to start an impeachment inquiry into the U.S. president. So we're getting into that messy season, elections a year from now, and those things are just not expected to really impact things, but they create noise. So that's the overall picture. I'm going to dive right into. Everybody's got access to news. You can go follow it. We're not going to talk about that much more. We're going to dig right into what's happening in the markets, and the S&P's auction so far has pushed up from yesterday's close. The inventory is 100% long and it's balanced for the most part. We have really good volume again, but then we also have rollover. Now, speaking of rollover and quad witching, here's where the state of the roll is. The pace is actually, the roll has now reached its, so if we go to the far right at 0 days to expiration, that'll be tomorrow, you can see that the average open interest rolling is 78.82%. That's gone up from about 78.82 with a range of 84 to 68, right? So that's 0 day historically looking. This is CME. This is on the CME website. Everybody has access to this. But you can see that the range is 68 to 84. The average is 78. We had a huge spike yesterday in the roll, and you could see that we are at 79.35% already, the current roll. So it went from being really lagging to being slightly ahead. The average is 78. We're at 79.35, and the overall average is 78.82. So what does it mean? Why do we care? Why am I wasting your time talking about this? It matters because it tells us that the roll is done. Normally, the roll is done by about Wednesday morning, something like that. Middle to early morning on Wednesday, it's done. But today's has been lagging. This week's has been lagging behind, and now it's done. This means that our order flow indicators will likely get less interference through calendar spreads, people who are trying to sell September to buy December, or buy back September to get short December, whatever it is, because futures operate on a single agnostic exchange, in this case the CME. We get to see what everybody's doing, which is one of the beautiful things when I came from equities into futures. One of the beautiful things about futures, and again, I want to remind you that they're not suitable for all investors. One of the beautiful things is it's transparent. We all get to see in front of us what each participant's doing, and it's broad and it's not controlled by any individual party. Everybody who's, depending on the amount of capital they have, can come in and influence the market within the parameters that the exchange sets out, or the rules that the exchange sets out. So we get to see what different participants are doing, and starting today, we can go back to using our cumulative delta, our footprint, and so on. We're still impacted by triple witching tomorrow, and triple witching involves the expiration of futures, options on futures, and options on equities. These are for options on equities. These are the monthlies, the big ones, the OSX and things like that. And even though the futures actually expire right at the open, there's still assignment and exercise, and there are still options that are likely to be in the money as the market's moving, and that forces participants to go into futures to hedge their delta and gamma exposure. Okay, at that point we have zero theta, and so there's this direct one-to-one hedge, because once an option's in the money, its delta becomes 1, and it just becomes a future, and you have to deliver that. And so you may go into the market to defend, or to be prepared to deliver that at the lowest cost possible. And so we have this kind of in play. But in general, starting today, we can anticipate that the order flow tools that we use are likely to be more in play. This is important information. I know it sounds very technical. It's important information that impacts how we trade. Again, inventory is 100% long. The range is 26 points, which is pretty healthy. And now the point of control is at that all-important 45.30, which was yesterday's high. And it's within that range of 33 to 35 that we've been talking about for some time. Let's take a look at what was expected yesterday. This is from yesterday's Trader Bite here. Scenario one was looking for a push into somewhere near 15 or so on the open. If not, then we were looking for 25. So here's what the screen shows in front of you: 15 as the first potential area that the market's likely to get a response to push lower. That was the first scenario that we are likely to push into 4,500 and potentially to 44.96. The secondary spot to do that was the 25. The tertiary spot to do that was the 30. And then, so that was scenario one. Scenario two was we test down, take out the prior day's low, put in a lower low and a lower high, and then we're likely to push to 30. You can see a line right here at the 30. That was yesterday morning before the open. Here's what we actually got. Let's take a look at the chart more closely. This is what it ended up doing. It ended up pushing into 25 right there, 25.75. We sat sideways, lower highs. We formed this channel. We finally give it up and get down below the prior, get below we're looking for it to get below into the 4,500, in this case 44.96. It did not accomplish that. It ended up pushing the IB through, and where did it go? It went to 30 and a quarter, 30 and a quarter. And this is why I emphasize having a price map, right? It's really important to have a price map. You're out there looking for treasure. It doesn't make sense. You can't just dig all over the place like many people do when they trade. Just take a shovel and dig and dig and dig until you run out of money and you don't find anything. It's better to find your clues, draw a map, and find the higher probability spots to strike gold, right? Not that that's guaranteed, but as an analogy, that's what your price map is. It's just a more intelligent way to come into the market so that you know when you should be doing nothing and when you should be acting. So we hit the 30, which was the scenario two target. So we had scenario two yesterday instead of one. We just couldn't let go to the downside. We did manage to take out the 45.07 quarter, which was the prior day's low. So it accomplished what was expected. In fact, yesterday we had scenario one and two, except scenario one didn't extend to 44.96 again and potentially into the overnight low, which was put in on CPI. But overall, what this is showing is that we had range extension to the upside yesterday, which was definitely in the cards. And then overall, we ended up with a lower low, lower high, price action wise. Time framing wise, we ended up with one time framing down continuing. We ended up with a point of control that's in line with the prior session on a volume basis, and we ended up with a point of control that's in line with the prior session on a market profile or TPO basis. So TPO wise, 25 is really important. Volume wise, this 15 is really important. And then we have the 33 to 35, which comes to us from way back here. This is the excess, the beginning of the excess, the low volume node, another excess up here. This is the 33 to 35. And guess what? Today we're above. Now, if you've attended the Trader Bite every day this week, these numbers should be just so familiar at this point because I've just beaten the heck out of them, holding these long Trader Bites, explaining how the price structure is really important this week, despite the roll. And if you go back to Monday's Trader Bite, you'll notice that I talked about while it was shifting higher, right here, I talked about the idea that it's most likely to trade in here. Some of you might recall me drawing something like this. I'm not going to go and pull Monday's video. I don't have anything to prove, but you can go look, and I talk about how it's very likely because of the roll, because of how we participated to the downside, broke one time framing down to the upside, then broke one time framing up to the downside. On this day here, how it's just bounced. Just remember, this week it's very, very likely to bounce. And what we did is we put in a double top at 43.50. There's your 43.50. There's your 43.50. And now we've pushed above and we're gapping higher, leaving a zone or an external gap down into 30 and a quarter, and we're in this gap zone. So now 43.50 to 50.75 or so. I don't know what the exact number is. Let's look at what that is. Looks like 51, 45.51. So we have this gap zone. So this is quite bullish. So this morning we have a gap, and it's gapping to the extreme of balance, and this is a very important indication of imbalance. And so what we're looking at for this morning, what I'm going to look for this morning from a big picture, not going to trade from a small tick chart, just looking at the overall market and building my plan for the day, what I'm going to look at is gap rules. This gap is big enough that it's likely not to get filled, but the question is, with 100% inventory and the fact that we are on the extreme of the range from last week, from about a week ago, are the bigger participants going to see this as an opportunity to book some profits and therefore sell long positions or hedge long positions by selling futures on their long whatever calls or stock or whatever, and therefore we get responsive. But even if we did, I don't anticipate it moving too much in the direction because of the size of the gap here. I don't expect that gap to be closed. We are at the extreme of balance, very, very easily can push through to the other side. And look at this right here. The 50-51 area is very important, and then above there, we talked about this quite a bit, the 57.60 becomes the dividing line between this balance and the upper distribution, which has a point of control of around 45.70 or so, 45.74.50 to be exact. And so does the market, so we are in this low volume area that has not been traded, so does the market want to push through to the next key distribution above? Maybe we can look at it a little bit better here on the composite right here. Does the market want to push this price, this low volume node? Let me stretch this for you. Does it want to push through this area here and start moving towards the upper distribution, right? To get the 45, whatever I said, 45 half, 45 quarter. Does it want to do that? Or are we going to test up into the gap, find sellers, and then come back in which case, again, we have the same price map as before. Again, I'm going to go through it. 35 is key, 30 below that, 25 as the point of control, the MC point of control, and 15 as the MC volume point of control. These become the areas where we expect the market to at least have a bit of a reaction that we can then do something with. But overall, remember, we've moved from balance to imbalance to the edge of balance, and so we're teetering on imbalance, and the question is, does the market open and become responsive back, or, wow, that video is really laggy. Does it become responsive back into balance towards 25, or does it become initiative, in which case, if we see the market pull back and have a strong impulse higher, please think very carefully if you plan to fade that by shorting it. If a market pulls back in a weak way and has an impulse up, meaning it has a strong rotation to the upside, and you're thinking, I'm going to get short here because of blah, 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 this is a very low probability trade and you're likely to get run over. So the expectation is a weak pullback, strong impulse back into 51. We're doing it already. Strong impulse into 51, consolidate, and we're looking for 60 as a first scenario today because we broke the one-time framing down. And we are in potentially initiative and out of balance. We are in a gap zone. You do not want to fade that kind of move. Now, if we open and push up in a weak way, and then we have an impulse down now 35, 30, 25, 15 get into play, and we have some pretty clear opportunities there. Okay, so those are the two scenarios. I don't want to make this video very long. That's all I wanted to cover. I'm covering it in the big picture. Looking at it in the short term, you can see that the mid VWAP and overnight point of control are on top of each other, and there's some separation in between these. The market again is out of balance. This is telling us that the market is out of balance. We're likely to have pretty aggressive participants come into the game this morning, so pay attention. But overall, you know, I'm going to be careful fading this this rally. I want to, you know, it's very, very close to filling the gap. If it does not have a strong move down on the open, and that's why I always sit out the open and just wait before I decide what the next step is likely to be. If it has a strong, unless it has a strong impulsive down, I'm really, my chances are much better leaning to the long side, and there's a lot in the overnight session that we can lean against. Looking at crude, now yesterday I talked about crude going to 90. Here it is, 90, right there. That's where crude is this morning. Here's crude oil. 90.06 is the overnight high. We opened on the high. We had a responsive selling spree that is being taken back, and this looks like an open auction now. So crude is very likely to struggle here a little bit at 90, and it's very likely to take out that high and move towards 90. I forget what the next level is, 90.65, I think, 90.65, so I can refer to it in the future. Ugh, that's a terrible 65. 90.65 is the next key area to test. Crude's got a lot going for it on the buy side. Good luck today. Hit the like button, comment about what you're hearing. Tell me if you disagree. Tell me if you're picking something up, or if you have questions. It makes it more worthwhile for me to do these when there's a two-way conversation and I'm not speaking over your head, or you're just completely lost and turned off by the amount of information I'm spilling out. Good luck.